Morning, it's Harvey Jackson from Producer Profit. Just going to get into maybe a little bit of a controversial kind of area of topic. The U.S. just basically having to get dirty, literally, to fight with, China and its other trading partners, and I mean even Canada. So the first article is just kind of talking about rare earth and what it's used for, and some of the retaliatory stuff that the Chinese have put on, and this rare earth minerals and just mining and process area. To begin with, it is dirty, and U.S. has kind of washed their hands from being involved in that first step. Kind of they've been in it, but then they got out of it, and China's willing to pick that up and do it. And the rare earth is used in chips, and it's important for U.S. industries, military, you name it, on the rare earth side. But the stubbornness on both sides is actually still there. There hasn't been any move that I've seen, and yet there still could be in the background. But Trump yesterday called out China, need them to sit down, right? Because this tit for tat, and obviously both the U.S. and China know the pinch points of each other. Limiting rare earths, hammering on the Boeing airplanes that are getting exported, and then the U.S. actually putting docking fees on any U.S. made or Chinese made ship, and yeah, it's all it's tit for tat, and it's not making the relationship any better. And I don't think the longer it takes to actually build or get friendly, the less friendly that they will become as well. Anyway, so this article is just talking about the 90-day pause, and it's a great time to buy. And if you look at this as maybe with a grain of salt here, you can see that he probably bought this suggestion himself the day that make money, right? Just leave it at that for now, I guess. So there must be some back end rumors here that oil, or that there is some talks. China's that there's open to negotiations but want key changes, and I think that's always been known. But sell the news and the fact, or whatever the saying is. It was on the previous slide, but I think fundamentals at the end of the day will end up getting figured out. But at the same time, the market is absolutely in chaos doing this, right? China's growth is not a measure of the tariffs, or the most recent tariffs in there, but they had pretty good growth. They had 5.4 versus it grows 5.4 versus the previous quarter. So good. It's a little bit better than forecast at the 5.1%. And I know I'm going to be flipping all over the place, but here's some cold coming in, and just have a quick look at that. Next Saturday, it looks like it's going to be extremely cold with extremely or quite warm spring type weather here. There's some pretty good frost events there. Now, is it going to affect any crops? There's very little planted, but it's only the winter crops that I would be maybe more concerned about. And if it creeps into the key areas there of frost. Another tit for tat scenario here. China's stopping all mail getting mailed to the U.S. So any packages of stuff, well, that's maybe a good thing, because maybe that fentanyl derivatives are not going to get mailed. And I should say that with a little bit of a chuckle. Fed Powell is to deliver economic view, I think, later on today. Now, he's got his hands full of trying to just kind of balance the economy, and it's probably not going in the path that even Trump wanted. And here somebody's trying to manage the inflation, and knowing job numbers and everything else. It's going to be a pretty difficult task. So I'm going to start off here, and I know my numbers are not 100% right here, but we know this is a StatCan number, and the StatCan number moves into here. Expect lower crush, even though we're on pace. I'm just trying to do a pace analysis, should say. We had this at 12 million crush for the longest time. But as these prices are moving up, you can see the pace of crush is slowing down. I expect the exports to probably slow down as well. Maybe it's only going to mirror the number from last year. That could be very possible. But this is also too tight of a number, especially if you've got year end in July, and you've got a crush that's going to be let's call it close to 1 million metric tons in August. Um, so this is just suggesting you got 879,000 tons carryover. I believe that would be incorrect. You probably need to be more than 2 and 2.5. I've seen some analysts are pushing this up to 3.5 just to be able to balance their numbers. I call bullshit in doing that. Like, just this is the numbers we know. These are the numbers that are the only ones that are real concern, and we're shaving them down as we speak as somewhat analysts. And here's a 3% decrease in yield with a 40 bushel average. It's too tight again. And with expecting to even go slower exports and bigger crush, and it could be a balance of one way or the other, but the numbers are not going to work, right? So if you look at this is a decreasing yield over the last 8 years. Even if you took that out, the 2021 drought, you're still in decreasing yield or production, I mean. So let's just have a look at canola. Canola is a couple bucks up. European rapeseed is up on the front, but down in the back, and you'll see maybe some differences there. Soybean oil is up. Crude oil is up a little wee bit as well, which is good. Soybeans flat, and your wheats are slightly up, and your Canadian dollar is slightly up as well, and the live cattle are up. So let's just have a look at it. So this is July, and I'll just point out this, like if we get to these areas, and if you haven't made enough sales, we're getting into that range right now. If you want to catch up on sales, and if you're looking at the values, and again, I'm just quoting one here, but if you're looking at the values, you're looking at $15 canola right now. You could lock in with Richardson. I know it's not the ideal basis. There's been better basis quoted there. I expect to potentially see some tightening of these basis levels as the market rallies up to try to get it out of the hands, as well as that supply is going to be extremely tight. And if we grow a smaller crop, it's going to if they're out there making sales, it's going to be a difficulty to fill up the pipeline even into the September months. So anyway, so here's your July or your November contract. So I'm looking at potentially getting back to those values. So we've got a little bit farther to go on new crop to get back to those previous highs that we made. And yeah, we'll just wait in there. So we're looking for that 665, 660 values where you should be actually pulling trigger again, just if you want to get a little bit more sold. The differential between European rapeseed and canola is $191. So European rapeseed in price in Canadian dollars is $191 higher than Canadian canola. That shouldn't slow down the export program for this summer. Here's European rapeseed. It's making new highs. It's amazing. But when you look at the new crop, it's not. So they obviously have a crop that's getting made, and they're going to be running out of their May contract so soon. But here we are. Their spring or their winter crop is going from May to August, and this is pricing in new crop. And they're, by what I see on the chart, is not suggesting that there's a problem there. So here's your soybean oil futures. We're getting back to some of these highs. Not to say that we're topping out here, but it's definitely supporting the canola for sure. And palm oil is actually just falling off a cliff as well. But we found a lot of new demand as the market pulls down here for that product. So soybean futures has risen. We're looking at if we can get into that area, we'd be shorting. Not necessarily here right now. Canadian dollar, I'm thinking we're very close to probably coming back down, but I'm kind of I've been beat up on the Canadian dollar way too often, and is it going to come down? I don't know. That would mean that the U.S. dollar is going to gain some strength, and I think the only way that happens is China and U.S. gets along, and there has to be maybe some reversals of the U.S. policies on the tariffs. But anyway, crude oil futures still sitting in the bottom. Green Day here, looking to improve to get up in some higher values there as well. That is still a good thing for the economy for sure. So here's your Minneapolis wheat. So if we're looking at those as being highs, we've come off of there, but kind of chopping sideways. And your Kansas is doing exactly the same thing. Now, if there's any snow and cold weather that's going to hit on the weekend, we'll see if there's going to be any upside to that market as well. Chicago wheat, But here's the Europeans. They're actually closer to the bottom on the market. So are we, but they made new lows there just last week. Corn looks like it's kind of getting a little toppy there, but it probably needs to pull back before it actually comes back up as well. Looking at going short up in the top here around that 508. Here's your cattle. So I had a client that actually shorted there. It looks like we're actually going to be coming back into that range where if we pull the trigger right now, we would just be break even. The market did fall, but it looks like it's almost going to try to recover here again. So same thing with live cattle as well. And that's all I have for you today.